All right, guys, I hope you're having a wonderful Friday. It was a awesome day on the stream. We got cut out, but we came back, and if you came back in time, you saw us play Chipotle, and this was the play we made. It was $35 to 170. I got two of them, and then we also made another play with the YOLO bucket, but shout out the chat. It was awesome today. Again, we are streaming. Oh, yeah, we did another play. It was Biogen. I'm going to go over those plays. I'm going to go over the transaction history for you guys. And I'm also going to use the option chain right now here at Friday's close so you could see where these contracts expired, so you can see where their prices are. I want to go over one of the plays from the watch list so you guys can see, and the strategy really played out. There's a lot you could learn, and then I'm going to talk about really the basics of options. And now this is going to be for both the beginners as well as the intermediate and advanced people. I want you to understand this is going to let you understand pricing. If you aren't a beginner, you're going to understand how looking at expirations here and even taking this fundamental view in a way is going to help you understand a lot better how the pricing of these contracts is moving. And at the end of the day, just studying them. And this is what I mean when I tell you guys, look over the options. And when I go over the watch list, I called out one of those plays on the option chain. I wanted you guys specifically to focus on the options, see how it moves, and just study the intricacies of options. You could notice what everything does, so on and so forth. So that's what I'm going to go over. Drop a like on the video, support the channel, and if you like this content, I'll make sure YouTube shows you more of my content like this, and subscribe if you're new, and then also the live streaming channel. Shout out the chat. I love it, man. Today was awesome. We had some great plays. So it's in the comment section, pinned, as well as the description, but live Monday through Friday, 30 minutes before market open. So let's talk about the plays. First was Chipotle. Now, I made it. Here's my other account. I'm posting that. You guys can see here the transaction history. I bought two of the contracts at 114. It was the 70250s. And notice, here's the chart for them. Here's where they expired. But at 114, like right around there, I bought the contracts, two of them for 35 cents. And now, if you go to the live streaming channel, you could go and see the clip. You guys could go check out the clip of one. I'll post probably a clip over the weekend here, make it easier. But I wanted to kind of confine this in here so you could see the other plays. But we go through. That was a good call out. We called it. It was great. It was part of the YOLO bucket. I got some on this account too. I did two flips on here. I got some for next week. So this is going to be in play. This is going to be on the watch list. And then I also flipped the weekly, but you can see, why I sold out of it. I did a day trade on it. It was literally quick, $28 to $68, but that's still just above 100% right there. But this play on the other account, I got the two contracts for 35, and then I sold one 4 minutes later at 119 in between this candle for $1.70, $170, and then 30 minutes later at like 149, kind of when it started coming down. I sold the last one for, again, a 170. I sold it for the same price. It did peak out, and I was holding the other one. It did clip 274, but I kept holding it. But again, that one was just playing it from the news, so I don't get to brag about the watch list just yet. And I'm going to go over one of the contracts we brought up, but that Chipotle play was really, really nasty. I know a lot of people made money in there. Let me know if you guys played it. Put it in the comments. What do you guys think? What do you think is going to happen with Chipotle next week? But I think that's going to be a good play. Some people even got calls. It bounced up. So there was a lot of winners on both sides. Shout out Chad, man. Chad did great today. But so that was Chipotle. But now the other play we called out, or that we did here on the part of the YOLO bucket, and again, people just started donating money on the chat when we were streaming live, so I figured I'll just take all of it and we'll put it into some plays. So I was supposed to put it in one play, but thank God I split it into two. I got screwed over on the Goldman Sachs one. We only got filled on one of those, but I did the Biogen here. So let's go to Biogen, and this was going up. This one reminded me of FedEx the other day and the other week, how it was playing out, where it waited, the contracts, they were really expensive on Biogen. If I go, let's see, on the April 5th. And again, I haven't got to the lesson here. And well, actually, maybe we should go back to, I'll show you this play too, you guys, so you can see real quick, and I'll give you the reasoning. But again, pay attention here at any level, even if this stuff is way above your head. Watch where the contract prices are, because you're seeing when we sold out. Even on that Chipotle, we sold before it came crashing down to zero. And also here on this Biogen, so I bought this at 10:52 in the morning Eastern time. I bought that for 40 cents. And then, where was that? 242. I bought those for 40 cents, and then come 11:49, I sold those for $1.20. So that was like, what, an hour? Just under an hour. So 10:52 and 11:49. So let's see how that looks over here. All right, here it's got like 1042 just starting to pop up. You can see it right in. We paid. I think I got screwed over. I remember I said I didn't like it on the chat, and then it went up a little bit, and then came down to 20 cents. So, and I called this. I said this was the YOLO bucket one. This was the play I decided to put the money into, and then it proceeded to run up, and I sold it at 120 at what 1149. Was that again? Yeah, I don't know why I keep forgetting that, but oh man. But here it is, 1149. So I sold it pretty right before it went up. It went up another 30 cents, and then again it came crashing down. And I said we were going to try to play it, and I said the word of the day on the stream was spacing, and it was again with this contract and how it was going to play. But there's two things. It's one, understanding how the stock moved, and it's why did we make so much money. So again, it's even on the Chipotle, those 702.50s. This is where it comes down to. So those are the plays, and then the last play too, I said to watch it again. This was the one I put up on the watch list, and I said this was the exact contract I said to watch, the 115 and the 114s. These gapped up this morning. These made epic moves. These were $1, came back down to 40 cents. These ended up closing positive. Oh no, did these close in the money? I hope these didn't close in the money. Dang it. Oh no, it's saying I'm gonna get exercised on those. Oh man. Oh, that's gonna suck. So I'm gonna get exercised on Disney. Great. Screw me. But so that's gonna suck. But these contracts, they did what we were looking for in the morning, and they ended up going up in the later day. But again, it barely closed above 105. But now these contracts, even though it closed in the money, they expired essentially worthless at 1 cent. So these were good. And again, this was watching that pattern and what I was saying to look for trading off the morning. But the key with these contracts is, again, this is the basics. Why did these contracts, even if they're in the money, why would someone only pay you $1? If not, they wouldn't even have a worth. I'm surprised someone would even pay for it. But think about it. This is what now a call and put is. So we'll even go back to the BIIB and even the Chipotle, but a call and a put. So again, we made money on both calls and puts. So in the case of Biogen here, a call is down to basic. It's the right to purchase the stock at a certain price. So this is how, this is why I even say options are like the penny stocks of the stock market world, or the blue chips, because you could pay a small amount of money and someone's agreeing to sell you the stock at a certain price. So you don't even need to own the stock to make money on it, because if you buy that contract to own the stock at a certain price, if it goes above that price, then this is in the case of a call, then you could buy the stock or the contract or the right to own that stock. The contract itself will go up in value. But now this is now looking on Fridays is why did it come down in value? Boeing still closed up at the end of the day. Boeing still went up almost 3%. It closed higher. Why did these 242.50s close worthless? One, they're out of the money. You have to it's simply ask yourself, if I said, hey, you could, would you pay me $5 to buy Biogen stock today from me right now? Today, this Friday, April 5th, that's when this contract expires. Would you pay me, if I paid you, would you pay me $5 to buy it at 242.50 when the stock's at 241.60? You're going to say, why would I do that? You're just going to go log into your E-Trade or your Robinhood, and you could buy Biogen for a cheaper amount on the open market, and you don't have to pay me a premium to own the right to it, because again, there's no real right to it if it's going to expire today. This is like trading money for shares essentially. So why would you pay a premium on there? So it makes sense why this contract is as low value. Even here on these 240s, now what did these go for? These sold for 120, and this actually makes sense, and we called it. There's even a play on Boeing after hours. If you watch the stream, it ended up dropping, and I said even after hours, up until Friday, you could exercise an option on Fridays, even if a stock drops after hours. So, but again, you have to think about the fees. So here, the last trade on this Boeing contract was what, 125, and when did that go through? Did it come through right at close? Yeah, it makes sense at 125. And now think about, why would somebody pay 125 today to own this stock? It makes a lot of sense at $125. So they have to they're paying someone $125 to purchase Biogen stock at $240 a share when it's trading at $241.60. So essentially they're paying $241.25 a share. So that's still below the price here, but then also at the end of the day, there's an exercise fee if they wanted to exercise this Friday. So that brings up the cost basis to like 145 if it's $20. So they're really saving 10 bucks if they did that at close. That's why somebody probably sold the contract. It was a $10 difference the market maker could have took. But again, understand what you're buying, and it's helping you understand how these contracts are moving, because during the day now and during a Friday, and this is what we were highlighting on the stream and playing these Thursday, Friday options, you have to ask yourself, why would anybody value a contract at so-and-so price? A lot of you guys, is this expensive? It's cheap. It's by looking at this. And again, the more you pay, if it's expiring today, you need to make it past that amount. So again, even here at Friday, at the end of the day, it illustrates it the best, because it's like, why would you even pay somebody $5 if this contract, there's no more time left, there's no trading? So even if you had, now think about, go back 1 hour before market close. Now ask yourself, why would you pay $5? You're like, oh, because it could move in 5 minutes. So now go back 2 hours, 3 hours, and now ask yourself, what is it priced there? And that's how we find some cheap stuff. So now today, that happened with Chipotle again, and we called that out on both. I played the weekly and the next week to get in there, but these were the 702.50s. Before I continue, though, onto the Chipotle, I got to show you what the thing to understand, though. Again, the basics of how this contract gained its value is understanding the basics of a call. Remember, it's the right to purchase the stock at a certain price. So when we bought it at this 1040, 1050 right here for $40, we said by the end of the day, and that had a few hours. This was within an hour of the market opening. We said in the next 6 hours, if the stock I believe Biogen was trading, it was $1.50, I believe, out the money at like 1042. Yeah, the stock was around here. It was $1.25, $1.20 out of the money. I said I'll pay $40 if someone agreed to sell me 100 shares of Biogen at $242.50 by the end of today. That's what that contract was. So $40 was a lot, and I even said that on stream because of how much it was going up in the velocity. But then again, it came down. That's why that contract dropped to $20 when you saw the dip. But then Biogen kept going up. But now here's why the contract gained value. It went to $243.93. So again, at this point here, and even when I sold it around here at 1149 or 59, right before, it was at 243.48. So 243.50, really $1 above where this was. And again, I sold it for $120. Think about where that money came from, because now, or why somebody was willing to pay for that even today, because it was now 11. The stock could still go up, or it's 11:49. There's still time in the market, but at the end of the day, I own the right to to get the stock Biogen at 242.50. It's at 243.50. So that contract will be at least worth $1 at the end of the day. So that's understanding the basics of it. Now, even now from an intermediate level, these are how you try to start hunting at the level of contracts. You just want to get into the money. A lot of you don't play the game of try to figure out volatility and this and that. Obviously, that is the level you need. I'm not saying completely ignore it. Take it into consideration. And this is how you could recognize it, though, is understanding how that pricing is going to go and getting what will be the value of the contract, just like that, if it gets in the money, and how much are you paying for that. So we paid $40 for that. That was kind of expensive, but I'm going to show you guys on Chipotle how it worked, again, on the put side. But that was a little expensive. It did come down. That was a great time. I could have averaged down. I told the people even on the stream to wait, but it did come up, and it ultimately proved to be a good deal for a short amount of time. But then it ended up, we sold off at the right time. And why did I sell off? That was the point. It got to $1.20. I was only making, and what happened there, that $1.20 it was up. The difference between the price it was trading at this point in the contract, the strike price, that's the intrinsic value. I figured at this point, Biogen could keep going up a few dollars, and I could either keep making $100 for every dollar Biogen went up, but it was already going up a lot. The contract, I already knew I overpaid, and this is what I was saying on the stream. So I took out, I said, hey, it's a 300% gain, $40 to $120. I sold out, and I said, I'll wait till it comes down for the rest of the day, because whenever now it breaks the way streak up, the contract prices are going to drop, because ultimately they're going to have 1 day left. So that's how I was sniping these Fridays, and I was going to wait, because if it bounced and it looked like it was going to come up again, I could have got those calls for cheap, but it didn't do anything. We didn't end up averaging down, but that was a good play. But then we did play CMG now. So Chipotle, this is the reverse understand the basics of now a put, a call, you are getting, someone's agreeing to sell you the stock at a certain price. The put now, instead, someone's agreeing to buy the stock from you at a certain price. So now, how do you make money on that is if the stock is going to go down, you pay somebody a dollar amount and you say, hey, I'll pay you this amount of money if you agree to buy Chipotle from me at this price by the end of the day. So again, Chipotle was up, and we did that trade happened at 1:14 p.m. It was like right here, we had I think Grant called it out on the stream. Shout out to Grant. That was amazing. And, somebody brought it up, E. coli in the stream, but there was an outbreak of E. coli. The CDC, they don't know yet, but it was interesting that Chipotle responded like that. But it was a play. I saw it dropping, and the contracts were cheap. I think the stock was trading at what? It was like at 705 or like 704, 703 in that candle. Literally, it was $1 away. But again, this was pretty late in the day. This was one. There was 3 hours left. So I bought 2 contracts from someone, and I paid someone $35, and I said, hey, I'll pay you $35 if you agree to buy Chipotle from me for $702.50 by the end of the day. He said, all right, well, of course, it was trading $1 higher. I'm paying him $70, and if anything, he'll get to buy Chipotle. Even then, look at what happened to Chipotle. He probably wanted to buy Chipotle shares at that price. He was down with it, so I gave him the money. I owned the contract, and then literally 5 minutes later, it dropped. And understand how I made money. It went to $1.70, even higher, but I sold around 119 right before it dropped there. But I got $1.70. But even then, it was around 702. It was at the strike price, but they were willing to pay me because now with 3 hours left in the market, it was already at my strike price. Someone said, well, I think it'll probably move down another $1.70. So even at the money, they paid me $1.70, $170, because they figured it would go down that much again in that 3 hour time frame. I sold out of it. It went up a little more, but then again, I sold out of both. As it started to bounce around here, I still saw it was holding 170. And if you watch, look at this contract, if you see how crazy this contract, price was, it's why did this contract do this? And again, this is what I said on the watch list. These are what you want to watch, because again, when they go in the money and out the money close to expiration, it's a zero-sum game. It's either going to be in the money and have intrinsic value and be worth something, because again, what is the basics of your buying? The right to purchase the share, and then all you have to do is factor in the contract price as your break even, and that's that. So we bought it at 35 cents. At the time it was dropping, people, even the guy at 702, even though it was $1 away, he thought it'll only drop $1.30 below. That's why he sold it to me for 35 cents a contract. So again, the cheaper you get these, but if the contract by the end of the day isn't in the money, why would anybody pay you for it? Again, because ask yourself, why would this guy now, why would he, take my money? He wouldn't take the money to buy the stock when literally he could even buy it at a better price. So like even this guy, like why would he even take, think about his incentive on the put side. By the end of the day, why would he take money? Of course, we're paying him and we're saying, okay, will you buy our shares for $702.50? Well, of course, the stock's at $710 now, so you wouldn't do that deal. They're going to expire worthless. Why would you pay somebody money to sell them the shares of a stock at a lower price? So that's something to consider. Hopefully this isn't long-winded, and hopefully I was trying to keep it basics, cover a lot of stuff, but I'm going to leave it there. Let me know if you guys want a part 2 on this, but ultimately, give me your questions below. We'll talk about this. If you made money on this, congratulations. Best thing too, if you do want to learn, we have the stock trading course that's in the description, but ultimately come on the stream. You can watch this live. We did this live. Go through the broadcast, on the past broadcast on the live streaming channel, and you can see everything we did today. So I'll leave it there. I love you guys. Have a good weekend. I'll see you this weekend with some more videos. Let's go.